This morning, with the local currency losing ground. Meanwhile, its global peers were mixed as investors remained cautious about whether central banks could raise interest rates to rein in inflation without derailing growth. Now, the long-awaited jobs data from Stats SA is also out, pointing to some recovery in South Africa's employment picture. Gary Booysen, portfolio manager at Rand Swiss, joins us now to talk through the latest business news. Gary, very good morning, good afternoon to you. Thank you for your time. Give us a sense of how the Rand is faring so far post the jobless data stats.
Yeah, so you're seeing a little bit of a Rand weakness this morning, and it does make sense. We've seen this kind of pattern play out in overseas markets recently when they're very, very sensitive to interest rate movements, where you actually get good numbers ending up as bad numbers for the currency. And the reason for that is with the unemployment rate printing a little bit firmer today, there might be a slight shift in expectations that the South African Reserve Bank may have a little bit more room, and we might not see as aggressive rate hikes coming through. While I suppose the default case is that we will remain in lockstep with the US. This maybe gives them a little bit more wiggle room, if you want to put it that way. And I think that's how the market is interpreting it. It's not much of a weakness. So we're trading 15.60 to the US dollar at the moment, around 19.65 to the British pound, and 16.74 to the euro. So a little bit weaker, but not too much action in the currency. But certainly very, very optimistic to see that the unemployment rate is coming down. In terms of the all-share index, we have managed to claw positive. We're about 0.2% positive. We have the resources on the back foot, and I think this is a little bit of concerns around some German CPI data that came out earlier this morning. Financials after a huge run-up yesterday, up to about 0.25%, and industrials up about 0.5%. This morning we had Asia fairly positive, but we had no lead from the US, which was obviously closed for that Memorial Day holiday last night.
With the unemployment rate dropping to 34.5% following the high of 35.3 in the final quarter of 2021. Talk us through some of the contributing factors to the drop.
Yes, I think it's mainly coming from the mining and manufacturing sector, and this is just as it tries to soak up some of the demand for commodities that we're seeing internationally thanks to the Ukraine war. Obviously South Africa is almost a strange beneficiary of the conflict, because with rocketing commodity prices, the demand for one of our exports has obviously increased dramatically. Now, while that segment was picking up, I think it's maybe a little bit too early to be overly optimistic. Of course, if we look at it going forward, even though it is nice to see the first improvement in 7 quarters, we still remain the highest of the 82 countries that are tracked on Bloomberg. And if we look at the economic environment on the ground at the moment, we've had flooding in KwaZulu-Natal, we have electricity shortages, global growth is almost certainly going to be under pressure, and of course we're all going to be facing potentially higher fuel prices come tomorrow. Yeah. So I think it's wise to be a little bit cautious, but definitely very, very encouraging to see a reversal of that trend.
Now, the youth and women remain some of the most vulnerable and most affected by the unemployment rate. What are those numbers looking like?
No, so if you look at it, there's no question about it. So, you've also got to understand that unemployment has many different measures to it as well. So the official unemployment dropping from 35.3 to 34.5 is great, but unemployment is defined as people that are actively looking for work and can't find it. There's also people that have essentially given up looking for work. Now, that expanded measure of unemployment puts our unemployment rate at around 45.5%. It also did improve slightly, but you can see the real pain in the segment is coming from that youth unemployment number. So if you look at people actively seeking work between the ages of 15 and 24, that came in at 63.9%, which is just absolutely staggering. If you look at the segment between 25 and 35, that's around 42.1%, so significantly higher than the official rate. And if you kind of look at it maybe from a different angle and look at graduate unemployment, you can see that graduate unemployment is only sitting at 12.6%. So the number is really being skewed by unskilled labor. It's not I suppose critical challenge for South Africans is to get educated. It's to train and develop ourselves so that we are more attractive. And there's no question that the skilled segment of the market is doing a lot better. So, difficult situation, but it all, I think, comes down to education.
Renet Investments published its final results for the year ended 31st of March 2022 and proposed dividend. How have they fared in the period under review?
I think in line with expectations, more or less. So their net asset value up almost 10%, 9.4% rise. Still trading at a very, very deep discount in terms of their market cap. Their market cap sitting at about 2.5 billion euros versus their net asset value at 5.9 billion euros. So still a very, very deep discount. Their underlying businesses, their second largest investment is British American Tobacco, and that saw strong sales up around 15.1%, which is obviously assisting. That as they move towards those next-gen products, trying to almost make smoking a little bit more healthy. Their largest investment, which is the pension insurance corporation, Pens Corp, that accounts for just under half their net asset value, actually saw a decline in new business premiums. But I think probably the most interesting part of the Renet numbers is just the massive pay down that they've managed to make in their debt. Coming into the year, they were sitting on around 837 million euros worth of debt, bringing that down to around 233 million euros. And often when you see a company progressively paying down debt, one, it's obviously in reaction to higher interest rates, but it's also a fact that management and I suppose those in control are a little bit less optimistic about the ability for I suppose in this case the general globe to grow. And they did that by essentially selling out of their private equity business with True Art Partners, and also selling some investments in RLG through RLG Real Estate Partners as well.
Very well. Thank you so much for that weighing in on the very latest in the world of business, Gary Booysen, there giving us a sense of how the world of business is looking like.